This Promnicast can be found everywhere. Subscribe via iTunes, Stitcher, YouTube, and more. Hello and welcome to Making the Trade. My name is Clint Bowers, principal and founder of the VOLSTA Media Network. Today with us from the Foundry Group, we have entrepreneur, author, Techstars co-founder, and venture capitalist, Brad Feld. Question number one, Brad. How did your early business ventures influence you throughout your career?
Early on, one of the things that was really drilled into me was the notion that regardless of what your long-term vision is, you still ultimately have to create a viable business. And with my first company, we did that. We only raised $10, self-funded. My father signed on a $20,000 line of credit from the bank that he banked at. And within 2 months, we'd lost $20,000. And we realized that not only were we $20,000 in the hole, we didn't have any more where that was coming from. So we had to make money. So the third month, we had added a few people. We fired everybody. It was just me and Dave. And we started month after month after month to be profitable. In the first month, maybe we made $1,000 a profit. The next month, maybe we made a couple $1,000s a profit. But we did that every month for the 7 years that we ran the business. And within 6 or 9 months, we paid back the $20,000 and decided that we would never get in that hole again. Subsequent to that, I've been involved in a number of companies where in the internet bubble, in the collapse of the internet bubble, we had very significant revenue streams, but we didn't fundamentally have solid businesses. The best example of that, the most significant example of that, was a company called Interalliant, which I helped co-found in 1996. Went public in 1999. Its peak market cap was about $3 billion, a little bit less than $3 billion. It was a company that generated about $50 million of revenue a quarter, so about a $200 million revenue business. But we'd mastered the art of losing $5 million a month. So we grew a lot and could generate a lot of sales and a lot of revenue, but we didn't fundamentally have an economic business. We couldn't get to a place with the business the way we configured it where it generated positive cash flow. We weren't focused on that because money was inexpensive and it was easy to fundraise, and that was no big deal until all of a sudden it was. And when the internet bubble started to deflate, capital vanished. Fortunately, at the time that it started deflating, we had plenty of capital. Unfortunately, that capital was in the form of a debt financing we'd done as a public company, which for the first year or so, we didn't have to pay anything back. But in the second year, we started to have to make debt payments. And for a company that's losing $5 million a month, when the debt comes due, you're not generating operating cash flow to cover your debt payments. And the spiral just got worse from there. So I learned that lesson again in a very brutal way, because that company ultimately went bankrupt in 2002. And as a co-founder of that company and as a co-chairman of the board, not in an operating role on a day-to-day basis, but as somebody who was deeply invested both financially and emotionally in the outcome, what I realized was if we had done something different as we built the company up to that level and been a lot more focused on building an economic model that long-term worked, we would have had a pretty interesting company. And there are good examples. There's another company that was started at about the same time as Interalliant called Rackspace, very similar business. And Rackspace, they never mastered the art of losing $5 million a month, but they were losing about $1 million a month when the internet bubble started to deflate. And they were able to very quickly turn that business around. And today, I don't know what the market cap on that business is, but it's one of the large cloud hosting providers that exists. So I've taken that into the work that I've done both at Techstars and as a venture capitalist. It doesn't mean that you have to make money out of the gate, but you have to fundamentally create a business that has a viable underlying economic model regardless of what your prospective scale is.
Question number two. What has been your hardest lesson in business?
The hardest lesson, which I learned over and over and over again, is the critical importance of people in the entrepreneurial journey, people at every stage of the company, and the key of the alignment between whatever company you're creating, the values and culture of that company, and the values and cultural affinity or norms that the people that you add to that business adhere to. So a lot of people focus on, I need to hire the best people, I need to add the best people to the team, and that's correct. but you have to add the best people to the team that also accept and are part of the cultural norms that you create for your business. So it's a combination of competence and culture versus just competence. So when I look back at some of the most painful moments, it was hiring or adding partners or investing in people who had different value systems than me or a different view of what they wanted to accomplish in the context of a particular company than the other people in the company. So that's the biggest lesson that I learned over and over again.
Could you explain the value of your credo, give before you get?
Recognize that it's a dynamic phenomena. It's not that you give and hope something good comes back. Mixed throughout it is lots of transactional activity. So, for example, when I invest in a company, I don't say, here's $5 million. When you have some success, just send it back to me, right? I mean, there's a real transactional dynamic, legal relationship. There's expectations on both sides. Those expectations are well defined. That doesn't mean that I can continue to give into the system and into that relationship in excess of whatever that transactional dynamic is. But there's a transactional dynamic underneath much of what entrepreneurship is. The second is my comment shouldn't be interpreted as you should just give and hope things come back. It's that you should have a value system where you're willing to invest some percentage of your time in other people and in advance of defining what comes back. And there may be times when the amount that you can do is 0% because there's so much other stuff going on. And there may be other times where you can give 10% or 20% in advance of knowing what's going to come back. In addition, recognize that give before you get or give first is not altruism. It's not charity. It's a way of thinking. It's a philosophy about how you engage with people. It's saying, how can I be helpful to you? Not, I will help you if you pay me this. And oftentimes, how can I be helpful to you results in some sort of transactional relationship, but it doesn't start from that frame of reference.
Last question, Brad. What is one of the most significant things you've learned about being an entrepreneur?
You don't motivate people. You simply create a context in which people are motivated. And I really very deeply believe that today. In the 1970s and 1980s, there was a lot of talk about, sort of how to build organizations, and you wanted to motivate people. Entrepreneurship is not about that. Entrepreneurship is about creating a context in which the people that show up every day are motivated. And that motivation has to come from within for everybody in that company, especially as the businesses are scaling up. What that means is that as a leader, instead of trying to motivate people, your goal as a leader is to understand what motivates each individual and then work hard to create this context in which they are motivated. This comes back to the thing I said earlier about this link between competence and culture fit. If you don't know what motivates somebody, what motivates them is A and you do B, doesn't help. If what motivates them is A and your organization doesn't need A or want A, they won't be very motivated. But if they are motivated by A and you do a lot of A, they'll be extremely motivated. The first part of that is understanding what motivates you. So doing your own inquiry, and my friend Jerry Colonna has a company called Reboot.io, and he talks about it being this sort of continuous radical self-inquiry as an entrepreneur, constantly trying to understand yourself better, given the pressures and dynamics of everything that's going on around you. My specific story or example around that is I realized at some point that I was incredibly intrinsically motivated. I spend a lot of time in an extroverted world. People understand introvert, extrovert. But I'm a deep introvert. Being around a lot of people drains me of energy. Being alone with my wife, being with a small group of people, reading, thinking, that builds me up in terms of energy. So in that, I started to think about, well, what motivates me? And it's not when somebody says, oh, Brad, you're great, or oh, Brad, thank you for doing this thing, or here's an award for being the, whatever. I got an award when I was 40 for a Lifetime Achievement Award for Entrepreneurship. I said, geez, I'm 40. Let's rename this the Half-Life Achievement Award. And then I realized that was probably not a very good label either. So this idea that accolades and gold stars and recognition, it's nice, but it doesn't motivate me. What motivates me is learning. fundamentally. And when I'm not learning, I'm very unmotivated. As I've gotten older, I had to link learning and teaching. I recognized that I was doing a lot of teaching, and often when I teach, I learn, but there's a lot of situations when you're teaching where you're not really learning. And so I started to understand that I was intrinsically motivated both by teaching and learning. And in the absence of enough of that, I'm not very motivated. I'm not very happy. I'm not very satisfied with what I'm doing. So I'm constantly looking for situations where I can both teach and learn because that charges me up. That's me. You should think about that for you. And the starting point in the context of creating a long-term entrepreneurial journey is understanding what motivates yourself, because you're the one that's going to have to create that source of motivation for yourself, not somebody else.
A career entrepreneur and lifelong learner. That was Brad Feld of the Foundry Group. Visit www.foundrygroup.com for more. I'm Clint Bowers with the VOLSTA Media Network. Thanks for joining us, and we'll see you next time. This series is produced and distributed by the VOLSTA Media Network. Be sure to check out other great shows, episodes, and more at volsta.com.